Good evening, everybody. We're going to get going at 8 o'clock Sydney time, which is a couple of minutes away. So just bear with me. I'm just going to wait for a few more people to come in. Now, if you're actually on our live YouTube stream, I can't actually see the chat. So if you're chatting to me, I can't answer any questions, but you're more than welcome to use the link that I put in the chat to register for the webinar, and then you can join us in the webinar room and ask questions. Okay, so you always have that option. All right, everybody, we're going to get going in a couple of minutes. Thank you. Good evening, everybody. I'm going to get going in a couple of minutes, maybe another minute to go before we get going. Just going to wait for a few more people to come in. Okay, everybody, thanks for your patience. Let's get going. So welcome to this evening's ACY Securities webinar. My name is Duncan Cooper. Thanks very much for attending. Before we move along, just a bit of housekeeping. If you can read through the risk disclaimer. And as well, any questions as we're moving through the webinar, just put them into the Q&A box. I've got the chat box open as well, but if you can try and keep your questions to the question box, that's always helpful. All right, moving along. If you don't know me, my name is Duncan Cooper. I'm the Senior Market Strategist and Trading Mentor here at ACY Securities. And I'm a full-time Forex trader. I've been trading the market for more than 15 years and mentoring clients for more than 10. And if you want to contact me about the webinars or anything educational-wise that I'm delivering the webinars, then just email me at duncan.cooper@acy.com. If you want to connect with me, you can get me at the acy.com website, Market News tab, where you'll find my analysis and education videos that we're doing at the moment. On the YouTube channel, any video that I'm doing, you'll find on there. So whether it's analysis or education, ACY Securities Australia, just pop over to there and have a look. If you want to connect with me personally, you can get me on Twitter and LinkedIn. Those are my handles. I'll just leave that on the screen in case you want to jot anything down just for a couple of seconds. All right, now one of the new things that we're delivering this year to supplement the webinar series that we deliver is we've got a Telegram channel that we're posting analysis. All the analysis is based around the lessons that we're giving in the webinar series. Predominantly the analysis is coming from me, and I'm looking at the charts, determining support and resistance and trend on pairs, highlighting levels that I'm watching to see where the price is going to be failing at those levels. So I might be contemplating trading at that level if price is failing. And what I'm doing is showing you how I'm coming up with trading levels in line with how I teach in the webinar series. So whether or not you're trading exactly the strategy that I teach in the webinar series or you've got your own, I'm sure you'll be able to make use of the trend analysis, the support and resistance analysis, and also the areas that I'm watching for price to fail at. Now, if you want to get access to that, just email Nathan Bray, nathan.bray@acy.com, and he'll contact you about getting access. All right, getting into the webinar series. Tonight is just live market analysis. We'll go through the market. I'm going to be using the tools I teach in the webinar series, coming up with trading levels that I'm watching for, determining trend, support, and resistance. We'll be using the Fibonacci tool as well tonight. Tomorrow, 8 p.m. Sydney time, I'm going to go through a lesson on Fibonacci. So if you don't really know what Fibonacci is, or you're a little bit rusty on how to use it, then I'll give you a lesson on how I use it. In fact, tonight I might use it slightly differently in some instances than how I will teach tomorrow evening, but that's just because I might be using it slightly more advanced. And over the coming 3 or 4 weeks, we're going to be going through the following topics as well. So the education webinars run Tuesday, Thursday, 8 p.m. Sydney time. So next Tuesday, we'll be doing MACD, next Thursday, average true range and session opening times. And following on the next few weeks, we'll be going through those items, okay? All right. So let's get into my charts. And just before I do that, I'm just going to put something in the chat, because my charts do look different to the ones you can download. So if you want to get access to my charts, I'm going to give you a link in the chat. First link is a link to my configuration. I'll give you Nathan's email there if you want to get in touch with him regarding the Telegram. And whilst I'm talking about the Telegram, if you don't know what a Telegram looks like, it's an app that you can download and then you can connect to various feeds. But this is our feed where we're posting chart analysis every day at the moment. So just to show you what's been going on, I posted a level I'm watching at the moment, which, where are we? This one here. This is the Aussie Yen. I'll discuss this in the analysis tonight, but looking at that area of around about 82, is it going to hold as support or resistance? So I post a chart and a bit of commentary about what I'm looking on the chart. All right, so if you want to get access to that, just use the email address in the chat that I just gave you, nathan.bray. Contact him and he'll give you access to that. All right, so let's get into my charts. And I'll just show everybody how you can set things up on my charts before we get into the analysis. It'll take me 2 minutes. But what you'll see is on a 50-minute chart here, I've got pivot points, the figure, today's projected high and low, session opening times, the MACD. That's all the indicators that I use on the 50-minute chart. So if you want to get access to those, so you can follow along in the webinars, then you need to download the configuration file. This is that file here. That was the first link I gave you. You just double click on the file and it'll open up. So I'm on the screen at the moment. It'll open up. Within it, there are some folders. They need to be moved to the MT4 trading platform folder. Just watch the 2-minute video and then you'll have it done. And somebody's just wished me good evening. Good evening back to you. I think you're in the UK there, so it's probably a good morning for you. But thanks for the welcome. All right, so we'll just watch a 2-minute video. If you really struggle about setting things up and you can't do it, then just contact Nathan Bray, the email I gave you. He'll sort you out. But most people can just do it on their own. Just watch a 2-minute video. I'll just show you exactly how to do it. All right, let's get to the charts. In fact, before we get to the charts, I just wanted to go to forexfactory.com. This is where I go to look at the news items coming out for the week. And if you've been watching the market closely, obviously last week we had the FOMC statement come out and that drove pairs down. Well, pairs to the US dollar declined. Most pairs to the yen declined. Most pairs closed pretty much on their bottoms, on their lows at the end of the week. And then once we started this week, we've been rallying back up. So most of us probably thought we would be going down this week. At the moment, we're not. And we might be rallying back up because there are some big news items coming out this week. So there might be some profit taking ahead of these items coming out. Those big items still waiting to come out are tonight, US ADP non-farm employment change numbers. We've got then tomorrow evening, Thursday, these times are Queensland time. 10 p.m. my time, we've got the UK interest rate decision. So the pound's been going back up at the moment. So There's an expectation that the rate's going up by 25 basis points. So people are probably buying that potential change. So if that's the case, maybe if we do get an interest rate change, it might not go up anymore because they've already bought the news, and then often we get a reversal after that. If we don't get an interest rate change, well, we probably will get a decline because those that are bought for the change, if the change doesn't come, we'll definitely get a decline. So it'll be interesting to see what's going on. But that's the big item coming out tomorrow. Another big item coming out tomorrow at 10:45 p.m. is the euro interest rate change or decision. I'm not expecting any change. They're saying here that the interest rate is going to be zero previous and zero forecast. And then there's a press conference. And then getting into 1 o'clock in the morning, Friday, we've got the US ISM Services PMI, and then the bigger one of that day is later on in the evening, 11:30 my time, the US unemployment rate. So we had a very heavy decline last week, and then we've got some big news items coming out this week. So I think the market's been moving back up because people have been profit taking ahead of those releases, and they're wanting to know what those releases are going to be before they then position themselves for the current month. All right, so be very aware of what's coming out. So a lot of my analysis tonight is going to be about levels that I'm watching, waiting for certain news items to come out before I might be contemplating trading. So depending on what pair we're looking at. All right, so let's get into the charts. The first pair I wanted to go through was the actual dollar index, just to show you. Go to the monthly chart, and these lines are monthly levels of support and resistance that the market's been playing with. That's last month's candle. It was an outside candle. It went down to monthly support from this old area here, found support. Then it broke through monthly resistance almost up to the next level. Now, as you can see on the monthly candle for February, it's only 2 days old, but it's pulling back maybe to monthly support that it broke through resistance last month. Does that become support? So we see that on the day chart. That's this line here. So for this big move up that we had last week, for that to continue over the next few days or into next week, really, I think the dollar index needs to obviously hold up above 95.95. So watch that. If that moves below 95.95, that means the dollar index is getting weaker. So pairs to the US dollar are going to move up. All right, so keep your eyes on that. I also like to look at the dollar at the moment, sorry, the S&P 500. In real terms, there's been a trend change. Monthly chart here, you can see that we actually broke below a monthly low here. Is that changing the trend down, or is it a false break? For sure, the weekly chart is down. We had some negative divergence at the top. And, we've had 1, 2, 3 negative weeks. Fourth week became positive on a reversal, and we're having a week up. Are we going all the way back up to the top, or is this just now price action coming up to put in a lower top for a further decline? So watch this. If we get a further decline starting to occur on this pair, and what I'm watching for at the moment is just measuring the retracement using the fib tool. We're getting close to a level of old support here. It's 45.79, approximate number. And price is heading up to that level, and it's very much close to the 62% retracement. So price could go all the way back up to the top, but this is an area that I'm watching for. If we start to have a reversal candle here today or tomorrow, and we start to have some days down, we may well then be moving down. If we start to see that, we're going to probably see the dollar get stronger and pairs to the dollar get weaker, and pairs to the yen probably get weaker. All right, so at the moment we're having, when we get to the currency market anyway, we're having 2 or 3 days of a run up since the start of the week, which I wasn't expecting, but the market, the market is always right. You might think half time or more than half the time you're right, but rest assured the market is always right. So let's get into now the dollar yen. And this is where it can get difficult. When you're just looking at pure trend price action, you think, okay, I can see a trend here. I need to be trading in line with that trend. And for the most part, yes, but sometimes the market gets tricky. It's in a trend, but then it changes that support or resistance, and it takes a while for the trend to change. And if you're not aware that maybe the market is stalling at a key level, you've still got your buyer's hat on, looking to buy, and the market's reversing. So I've been talking about this level for a long time now, 114.72. This is a monthly area that we've been toying with. Back in October, we held. November, we rejected. December, we just managed to close above on the monthly. Then we popped further up last month, up to a next level over here. I haven't got it drawn in, but about 116.46. And then the candle that we had for the month, as you can see there, is pretty much a doji. It made a gain for the month, it made a loss for the month, but by the end of the month, it really didn't do anything by the end of the month. So is that a signal that we're holding there, and the sellers are really holding it there, and we've come to an end of a move to move back down? We are at the moment, we're at 114.58, so we're back below this monthly top that I've been focusing on for a long time, 114.72. And if we forget that we've traded fractionally above that level, there's a long-term, I'm just drawing this in roughly because we're miles away from the bottom of this range, but hopefully you can see there's a large established range here. So we could be failing up here at the top of the range for a move down. It is taking a long time to fail, and we may well move up and through, but there is, there's at least, we're back below that monthly level. So there's more than a 50% chance at the moment that we may be failing here to move down. But when you go through the lower time frames, this weekly trend is still up by price action. Got a higher top. This is maybe a higher bottom. The only negative thing I'm seeing though is there's a fraction of weekly negative divergence here. Just a fraction, making higher price action up there. So that could be that's one thing that I'm considering might be a signal that we're getting a change here. Obviously, we're negative for the week. Earlier, or I think late last week, early this week, I've been discussing the dollar yen in the Telegram service, watching 115.51 as a possible area for failure. And you can see, so this is Wednesday, Tuesday, Monday. We traded back up at 115.51. So we rejected Friday. So Thursday we're a fraction short. Friday we rejected. Monday we rejected, and now we've moved back below monthly resistance at 114.72. This 115.51 is that top, that's weekly resistance. So we're moving back below monthly resistance. So are we now moving down to daily support, or are we moving down to weekly support? So at the moment, it'd be great if we move down to that level because I'm short 112.52.8. So I would say that would be a medium-term target at the moment if you're wanting to trade this pair. But Joe, yeah, I'll get to the Aussie dollar in due course. All right, so there's the daily. At the moment for me, I'm actually trading down this pair. So I'm watching, the levels I'm watching that could stop the trade is at 113.46.6. That's the daily level that could stop it. And then the weekly level below. In terms of getting in on board this pair, as you can see today, let's move it down to a 50-minute chart so you can see intraday price action. That monthly level at 114.72, we've moved obviously clearly below it today. So I'm not going to, if I was wanting to get into this pair, I wouldn't be selling it down near the low of the day at the moment. But what I'd like to be watching is any retracement back up. Does it start to show an intraday failure at 114.72? Because if this pair is going to start to move down now from that fair at 115.51, it should now that's below 114.72, 114.72 should become resistance for a rally. So into tomorrow, you can be watching 114.72. Does that hold as resistance on a retest? Okay, to trade down from. That's what I'll be watching on that pair. All right, I'm going to start with the Aussie Yen now. I did do a post on this today in the Telegram, and they're going to go to the daily chart. But we'll go to the weekly chart first of all. We've got a fraction lower bottom here. We come up and we put in a lower top. So as I've been saying over the course of the last few weeks, I'm in general terms expecting that this leg here may be getting copied down that way over time. All right, we've got a lower top forming now on the weekly. And this is this level of resistance has been used quite often. This is a level of weekly resistance here from that top at 82.019. And that's a level that I'm focusing on as a potential level to sell down from. It's actually traded up to about 81.98 or 99 today. So maybe it's not getting to that level, but it's got pretty much filling at the figure. Very close to that level. So to the day chart, what you're seeing is that we've got lower tops and bottoms all the way down here. We're having a rally from a lower bottom. Is this putting in a lower top underneath weekly resistance? This is a high probability level to be selling at for the next run down. You could be putting a fib across that range as well. Move to the 4-hour chart. What you'll see is that we've got a little bit above the 79% level, but now we're back below it. So are we going to see, is that where price is failing? So it's just failed just short of 82. My line should be actually 82.019, I think is the exact number. That's close enough. 82.01 is close enough. So we just got fractional short. It got up to today 81.98. So if you're looking to sell up there at 82.01, you just missed it by 3 pips. But you hopefully managed to get in a little bit lower. I know some of my colleagues at the office, even though I don't work at the office, but I was talking with them today. A number of them were selling up here just short of 82. So maybe that last daily move down, which was down through there, is now starting to get copied down this way. All right, so maybe not in yet, but I'm expecting a move. If we're going to hold here, I'm expecting a move down, maybe down to 127 extension level over the course of the next week. Over the course of maybe a couple of weeks, let's just go back to the daily. Targeting down here a weekly support, which is at 78.82. All right. All right, so that's what I'm focusing on there. Just drop that down to the 15-minute chart. You can see there we spiked up within a couple of pips of the figure. You could have gotten in on a trend line break, one of the setups that I teach. If you were watching that, there was a trend line break here. Depending on where you put your stop, though, you may have got stopped. But if you didn't take the first chance, then you could have taken the next trend line break, and yes, you could have been in a trade. All right. Or you could have been trying to be selling up here on first contact. All right. Now, it may well move back up and give another test up there. So just because it hasn't traded into 82.01 yet, there is still a chance that it might trade up there. So you can be watching up there, a weekly resistance in the figure for a failure. But maybe, if we start to form resistance now at the 79% level here at 81.76, and he doesn't want to get above there, maybe then you want to be making a focus of trying to trade down from that level. All right, so it might have another go up there, but maybe that's already occurred. So that's what I'm watching there on the Aussie Yen to the Aussie dollar. And this has had quite a meteoric rise over the last 2.5 days. So let's have a look at the trend. Weekly chart. Overall, we're in a downtrend. We've moved down to a lower bottom, put in a lower top. We've tested this. We were underneath there on Friday, but then obviously we're rallying back up at the moment. Is this going to be long-term support from over here, 69.91? Well, it is long-term support, but is it going to be a level that can't be broken long-term? Or is it just a bounce at the moment? Often what can happen, because we bottomed down there on Friday, and then we had one more trading day for the month on Monday. Often what can happen at the end of the month, fund managers, large traders are squaring their positions at the end of the month. So if they've been short coming into the end of the month, they're closing their positions down, waiting for a new month to start. That can create buying pressure, obviously, then on the pair. So we're obviously seeing some buying pressure there. But the weekly trend is down. We're just trading back up inside last week's candle. And even on the day chart, there is no trend change because this is all lower tops and bottoms. It's just a rally. And I've got some levels drawn in. So that bottom level is the monthly support at 69.91. Levels that I've been using for support and resistance. This one at the moment, probably not valid at this stage. I could take that one off. I'm going to leave the other two on, which are support. They've been acting as support or resistance. There's this low here at 71.06. And then this low here that we're trading into today at 71.29. So I'd like this to move back below 71.06 to be a comfortable seller, because we've, this level once broken below should be resistance, and we're back above it. So maybe now it wants to become support again. Once we move back above here, it became support to move further up. Is that going to be the same deal? So you just have to watch 71.06. If you're selling it higher up, watch 71.06 to become support. Maybe, hopefully it can break down. But as Joe, there's a possibility, as you're saying there, of a double bottom on the weekly and the daily. The problem I've got with the double bottom, I know what you're saying, there's a double bottom there. I'd much prefer a double bottom to be happening when this top isn't a lower top. So, for example, let me draw something in. So a price comes up, puts in a higher top, then we come all the way down to make a double bottom. And then we go up like so. But what we've got at the moment is we don't have, the top here is a lower top. That top's lower to that one. So it could be a double bottom, but it's always going to be a stronger double bottom if the double bottom is forming with a higher top in the middle. All right. Doesn't say that that isn't a double bottom. You're quite right. Possibly it is, but I do have a lower top. And the thing why I'm not really that, I could be completely wrong, but I'd be a lot happier because we had a very good move down. We bounced on support and we rallied. Let me take it to a day chart. So that's that move down. We bounced on support, but this bounce up here pretty much got capped at the 50%. So for me, is that like a dead cat bounce? And I know you're saying Aussie dollar interest rates only going north from here eventually, true. But for the Aussie to move up based on interest rate differentials, the interest rate in Australia would need to be higher than the US. All right. Now, the US is saying that they're going to be raising interest rates, I think, 2 or 3 times, maybe starting in March, whereas the RBA aren't saying that they're raising interest rates. Yes, at some point they will, but the probability is that the US are going to raise more aggressively, so they're going to be higher. They'll have a higher rate than the Aussie. So then the balance of the interest rates are in favor of the US. So that doesn't actually put pressure on the Aussie dollar to go up. It actually puts pressure on the Aussie maybe to go down rather than up. If the interest rates rise quicker in Australia than the US, then for sure what you're saying, I would say wholeheartedly then, would factor in that this double bottom might work. Now, this double bottom might work, but what I'm looking at is other factors as well. I know there's a double bottom there, but when we last bounced here, we only bounced 50% up of the decline. All right, the current decline, which is from here to there, if I use the whole range at the moment, we're at 50% again. All right, so we're having 50% of the current range down. If I was drawing a fib though, in terms of the day chart trend, I'd be using it from that lower top just to measure where we are within the current move down to rally. So we're almost at the 62% level. So We can have different thoughts about what we think the Aussie might do, but until I see the day chart trend change on the time frame that we're looking at, so until the day chart time frame changes, I'm not going to consider that we've got double bottom. If we do get the day chart trend to turn up, then I'm going to start to change my opinion. All right, and I've got lots of things coming in. So where would I short from? All right, let's get to that. And I actually did a post today. And what I was looking at, see this big drop down here? We got a break here. I think that level's around at what, 71.52. So we're fractionally short of that level. So what often happens is when price has a significant drop because of news, and then it starts to come back up, it often comes back up to the point of the break. So we're almost pretty much back at the point of the break here. All right. So for me as well, what I also like to do is look at where price is in relation to last week's candle range. So what I do for that is I draw a fib in across the range of last week's range. So I'm just drawing that in. So this is across last week's candle range. It's not a specific range in terms of high tops and bottoms on the chart. It's last week's candle range. And we're at the 79% level of that range too. And what you'll find is if you do a study of this using the weekly candles, and I've got two more examples that I'm going to go through this evening just to show you how I'm looking at a few pairs, is often price will reclaim back up within the weekly candle to the 62% level or the 79, and then stop and turn around and go down for the rest of the week. So when you're asking me a question, where would I look to short? At the moment, it's in a great area where it could stall at. So to me, at the moment, this is a very logical area where the sellers could take control. We can see on the 4-hour chart that the candles are getting a little bit negative here. So then this might be a very good area to look for a short. Then you have to ask yourself, what is your trigger to get in short? All right. So for me, where we're at, it looks like it's a possible level where the market could stop at, but then you have to ask yourself, what's my mechanism to get in? Is your mechanism a very simple trend line break, which we've already had, or what else is your mechanism? All right. So for me, it is at a good level where the market could fail at. Then it's a question of how do you get in for yourself. All right. So hopefully that helps you there, Badger. But you're quite right. There's a possible double bottom there. But I'd need to see the day chart trend turn to up for me to start to think about, yes, okay, that's coming into fruition. If the day chart just remains down, we may well just see, if we go back to the 4-hour, we may well just see this now start to move back down and have another retest of 69.91. All right. Just going to clear off my questions so I know where I am. Mustafa, let me just read your question. All right, so you're asking about Eurodollar. I'm going to go through Eurodollar. Yeah, I did some video analysis earlier in the week, but obviously things have changed. Prices have been going up for 3 days straight. So yeah, I'll get to that pair. All right, I'm going to go to the Euro Yen very quickly. We've got the interest rate decision coming out this week. And I'm not really trading this. The only thing I'm really noting is that even though we popped up here on the day chart, maybe changing this trend to up, this little area of resistance at 129.23, we're kind of just holding there. So we've been in a downtrend through here. I'm going to go to the weekly chart. For me on the weekly chart, so sometimes you can have a week up when the market's just waiting for some news to come out, but we've moved down to a lower bottom. We've coming up and putting in a lower top, and we've been falling back down. Yes, we've popped up a week here, but that might just be a bit of short covering, waiting for the news to come out tomorrow. So for me at the moment, I'm still on the downside bias to this because of the lower top, lower bottom formation. But when I look at the day chart at the moment, I've got my support and resistance in. So this is weekly support here. Daily resistance up here. That's at 129.63. So as long as we stay below 129.63 and hold below that level, there's every chance that we're going to turn around and move down and challenge there. So I was saying this last week, my viewpoint still is saying that this weekly move down here, I'm under the assumption, unless the weekly chart trend can change, we may well get a further leg copied down. So I'll go back to the weekly chart just to show you. We may well see a leg copied down here. So any failure up at this daily resistance at 129.63, you know, we've got some news coming out tomorrow. We've got some news coming out on Friday for the job figures. If price spikes up here and starts to fail at 129.63 and can't, you know, get above there, then I would be anticipating that might be where price is holding at resistance to trade down to test weekly support. At the moment, I'm not doing anything on that pair, but I can already see today it doesn't want to get above that daily resistance level at the moment. And just to give you a bit more analysis on this pair on the 1 hour, there is the potential, even though I'm not trading at the moment, we want to talk about what's going on. There's a potential for that to be a left shoulder, that to be a head. It's moved down to a lower point here. There's the potential that we've got a right shoulder forming here on the 1 hour chart. And I put fib in. There's a potential here that we've moved up to the 79% level, and now we're moving down, maybe down to 127 extension level over time, over the next 24 hours. All right. So that's what I'm watching on the Euro Yen. I'm kind of on the sidelines until we get past the news on the Euro pairs, but that's what I think is happening on that pair at the moment. All right. All right. So let's go to the Euro dollar, which had a very strong collapse last week. So I'm just going to take a few lines off. I'm going to show you how I'm getting my lines in on this pair. I might just put my lines all the way back in. So it's worth noting, let's start from the monthly. We've got lower tops and bottoms. And my target, as I was doing in the video this week analysis, is long term. We've actually broken the low of last year already. So last month in January, we broke the low of last year. So maybe we're having another year down. So the next notable level of monthly support is at 108.79. So that's where I think price might get to over the next 2, 4, 6 months. All right, let's go to the weekly. So I've got weekly support. Next level will be down here at 110.18. So obviously we need to break through there to get down to monthly supports. And then these levels at the start of the week, we were underneath these levels, 1 and 2. So I had those as resistance. We're obviously clearly above those levels at the moment. So they're acting as some form of support in the short term, but they may well act as resistance again in the future. So what I was saying at the start of the week was when we were kind of maybe still wanting to be below there, or might have the opportunity to be below there, is this level here at 111.86. And my viewpoint might be changing a little bit now that we've moved further up. But really, if we are going to have a long-term move down, 111.86, this weekly level of, I would say, support at the moment, because we're back above it, it needs to become resistance. We need to be able to trade through it and then hold below it and move further down. So I've said the monthly trend is down here on the weekly. We've got lower tops and we've gone down to a further lower bottom. But we did have quite an aggressive drop last week. So we are just trading back up inside the last week's candle. All right. To the day chart, even though we're going up, this day trend is down. This is lower bottom. We're just coming back up. I've been watching this level here, 112.72, a fraction above it at the moment, 8 pips above it. But 112.72 could over the next few days become a focal level of resistance, depending on what price action does post news tomorrow when the interest rate decision comes out in the Eurozone. So at the moment, I'm just waiting to see what the news comes out tomorrow. But once 12.72 daily resistance really at the moment, we're 8 pips above. If that holds as true resistance, then getting short close to that level for then a further move down to target 111.86 break off would be a good idea in terms of a strategy. I wouldn't want to see this come up too much further. I mean, it could come up too much further. It could come up to this level here, 113.86. And then it might fail there, and you could trade down from that level. Obviously, we're not there. So there's a couple of levels there, like 113.86, 112.72. Those two levels could act as resistance over the next 24 hours once the news comes out. If they do, then you could think about trying to trade down from those levels. What I'm also looking at in terms of why I think price might be faltering here, it's going to go to my other set of charts and to my euro set here. So what I'm doing here, I just discussed on the Aussie about where's price in relation to last week's candle. So what I've done on this 4-hour chart is I've drawn in last week's candle here. I've made it red for negative because it was a negative week. And I've drawn the fib across that range. So what you can see is that we're within the range of last week. We've just gotten short to the 79% level. And as I said to you on the Aussie analysis, often when we get a strong drop because of the news, we often then trade all the way back up to where the drop started. So this was when we had the FOMC statements, and that candle there was the big drop down. So just look where we've come back to. The candle that started the drop. All right, that is often the case. Price just comes back up to where it dropped from before it just holds and moves back down. So I'm watching this area just here. So in terms of last week's candle, we've rallied back up to 79%. We could now just trade all the way back down from that level. So if we do start to move back below 112.72, and that starts to show resistance, then that would be starting to maybe prove to you that we're topping out intra-week. And this area here could be where we're coming and putting in an intra-week candle. Now, the other thing that I do monitor is the actual previous month's candle too. So this larger red square is my idea of last month's candle. Got a fib drawn across it. So depending on what the news will do tomorrow, we could spike further up. The 62% level here of the monthly range is at 113.44. So I will be watching that level too. All right. So what I'm doing here is I'm monitoring the candle ranges, not just the price ranges. I'm looking at last week's candle. I'm also looking at last month's candle, because what I'm talking to you here about in terms of the weekly candle, often, you know, we load on Friday, put the low of the monthly on Friday, and we've been trading back up now inside the monthly candle. And often it will trade up to the 62% level on the monthly candle, or it would trace back up to the 79% level of the monthly candle before then totally turning around, putting the intra-month high in, and it trades down all month. All right, so I'm just monitoring those levels to see if I can start to see failure that I want to trade around. And let me know what questions. So Basjo, you're saying, how can I put in support and resistance as I have it on the chart? Well, these black lines are just the same lines that I was showing you from this set of charts. I'm just using the highs and lows from the weekly, monthly, and day charts. All right. I'm not sure if that is answering your question. If you're asking me, how do you determine where the monthly highs and weekly highs and lows are? Well, you can just simply go to the chart. Let me open up a new chart. You can just simply go to that time frame and just work out where the levels are from the candle. You just put your mouse on the candle. Down at the bottom here, it will tell you where the high and low is, and then you can draw the fib across that range. All right, you can just work it out. These dotted lines that you see, if that's what you're referring to, that is an indicator that I've got. Currently, it's not one that I distribute via ACY. So it's one that I just personally use. So it quickens the speed up, where you can just go and reference it from your monthly chart and your weekly chart. All right. There might be a time in the future where I'll distribute that indicator, but at the moment it doesn't get distributed. All right. So that's what I'm looking at on the euro, just to put things in a little bit more perspective. So if we go back to my other charts, we're talking about the euro dollar. keenly watching to see what is price doing at 112.72. I'm not going to engage on this pair till we get past the news, because once the news comes out tomorrow evening, this could just fly up here 100 pips. It might fly up to the next level. Of course, it can just drop 100 pips and then you miss out, but I don't want to be in the wrong side of the market and then the market just goes berserk against my position. So I'm just going to wait, and then hopefully it will give you an opportunity to trade around one of those levels. All right. Sometimes the news will go berserk and you just miss out, and that's just the way things are. Of course, depends what your risk profile is like. If you're happy to be in when that news comes out, that's entirely up to you, but I'll be waiting post news. So Mustafa, I'm just looking at seeing what you put in the chat there. And you're saying, so the offer side can be your high probability choice. So I'm not sure what pair you're relating to. But if we're talking about the euro, because I don't know, you put a question in about the euro. Yeah, on the euro, my preferred side is the sell side, because, you know, the monthly trend here, it's got lower tops and bottoms. The weekly trend, we've got lower tops and bottoms. We're just trading inside last week's candle, like I've just been showing you. And the daily chart, we're lower tops and bottoms. Well, lower bottom anyway, from a higher top. You know, putting a simple fib across the whole range, we're halfway up. So we might move up to the 62. It might not respect this level of resistance I'm discussing. It might come up to the 62 level before turning around, but my overall bias is to the downside post news tomorrow, unless the news changes the whole trend, but we'll obviously see that if it happens. All right. Basjo, you're asking me about the Telegram. If you look in the chat, I put in an email address in the chat for Nathan Bray. You may have come in after I posted that, so let me just post it again. If you contact Nathan Bray, I'll give you his email again in the chat. Oh, hang on a minute. Bear with me. All right, hopefully there, Basjo, you've got Nathan. You can see Nathan's email address in the chat. Just contact him. He'll tell you how you can get access. Okay. All right, let's move along. What time was it? Just want to go through now the pound dollar. And let's go to the day chart. And this looks a bit busy. Let me get rid of my fib. All right, so I'm going to take a few lines off here. Now, before I take my lines off, this is the day chart. We're obviously having a move up here from day support. That day support is at 133.74. I don't actually need that on the chart at the moment. That's where we're moving up from. And the question is this level here that could be on the day chart, support or resistance. Resistance in this case. Are we moving through that level or not? All right, so I'm just watching that level there, but I'm going to take that level off. The bigger question is the two lines that I've got drawn in here. I'm going to go to the weekly chart. These two lows here, we've moved back below them. So I'm watching those two levels. Are they going to be acting as resistance if we come back up to those levels? All right. So from a weekly chart perspective, I'm watching that. You can see that we're trading all the way back up inside the candle. We haven't taken up above the high. In terms of high tops and bottoms, lower tops and bottoms at the moment, it's all lower tops, lower bottom. Now, of course, this might be putting in a high bottom here, but until we've got a high bottom, I'm not going to guess it's a high bottom when I can clearly see I've got lower tops and bottoms. So when the news comes out tomorrow, yes, this could shoot up 200 pips, and then we might be starting to say, yes, we've got an uptrend forming. But at the moment, we may well just be coming back up to resistance to hold before further moving down. And when we look at the bigger range, that was the last weekly move down. That was the corrective rally back up on the weekly. I put the fib back in. We failed at the 79% level. And we've been moving down. Of course, we're having a bounce up at the moment. It's going to pause for that question coming in. All right, Baz Joe, you asked me at the start of the day, what are the first things you look at besides your open positions? Well, every day I start almost afresh. I put in my support and resistance, starting from the monthly chart, work through the weekly and the daily, so I know where the key levels are. I look at the trend, and then I work out what trading levels I might want to trade at through the trading day. So that's how my kind of day focuses on. All right, so on the pound dollar here, we're having a rally back up. In terms of tops and bottoms on the daily, we've got lower top to a lower bottom, and of course we're rallying here. In the bigger structure of things, if the weekly trend remains in place, we may well see, I'll go back to the weekly chart here, we may well see that move down being copied down here. You know, if the trend doesn't change and continues down, then I'm just assuming that's going to happen. What we're seeing on the day chart at the moment is the day chart trend is down. And I'm just using this chart at the moment. I'd have my fib drawn from that high down to that low. And what we're seeing is we're having a rally at the moment up to the 62% level. And if you know about the fib, I'm going to talk about the fib till tomorrow as a lesson, but the 62% level or the 79% level for me are the focal levels where price will often stop at and then reverse back in line with the trend. So we're running back up to the 62 on the day chart structure. And that's the 4-hour look at the moment. So it is in an area where the market could start to stall at and turn around. It could go up a little bit deeper to the 35.71 weekly resistance area. It could go a bit deeper, even further up to the 79% retracement level, 35.96. That's very close to the weekly 136.02 level. So I'm watching a few levels. Of course, at the moment, this is moving up. It's the third day it's been moving up. So the day chart trend is down, and I like to trade in line with the trend. So for me, I'm looking for an opportunity to sell, but I want to be sure that maybe the 4-hour chart trend has stopped and is turning around. So I'm not sure yet. So I'm just monitoring the price action to stop and start to turn around. So I mean, I'm watching the 62 level there, watching the 35.71 level, and the 136.02 level up here. All right. So when we get the interest rate decision coming out tomorrow, we'll have a clear picture then about which way this might move longer term. But this is just a rally against the day trend at the moment. Some more questions coming in. All right, Badger. So yeah, at the start of the day, I will check the dollar index. I do check the S&P 500 direction as well. I don't really check the VIX like you're saying, but yeah, as part of my analysis, I do look at the other markets. I look at the dollar index. So I don't know if you came in fractionally late, but at the beginning of my analysis, I was looking at the dollar index and I was looking at the S&P 500 and talking about what their current directions are and what they're doing right now and how that might be affecting what the market's doing right now. So yeah, at the beginning of the day, I'm looking at those two instruments to make a determination of how they might be affecting the currency pairs I'm watching as well. And of course, how that might affect my open positions. You're asking me as well, how important is the 50% level for me? It's not that important at all. I don't really watch that level. I watch the 62 and the 79. Yes, price can stop at the 50, but if you went and draw fibs over major ranges time and time again, from a probability perspective, more times price moves up to the 62 or the 79, in my opinion anyway, from my work and experience on my own trading, okay? So I don't put too much emphasis on the 50. I know it's there, and I can see when price is failing there, but often for me, because price will move up to the 62 or the 79, I'm always concerned that price will move beyond the 50, okay? All right, great. Thanks for the questions. Just tying up my questions so I know where I'm at. All right, so with this pound dollar, I have also on my other charts done the same thing that I was discussing before on the euro dollar, just to put things in perspective. So the two red things, this red one here is the range of last week's candle. This one here is the range of last month's candle. So we had a very negative month last month. We almost closed down on the bottom of the month before we started to rally back up this week. So I've got a fib drawn here just to show you across the weekly candle. So we're above the 79, but we haven't taken out the high last week. So this could start to move back below the 79 level. So the 79 level is at 135.20. All right. Now, if we do move a bit further up, if we look at the monthly candle, the 62% level of the monthly candle is at 135.98. So it's almost the 136 level. At the 136.02 level, I've got weekly resistance that I was discussing before. So one of the key levels I'll be watching if we do go up higher is weekly resistance at 136.02, because that price level is pretty much the 62% retracement of the monthly candle. So if we were to stop there, that could be the interim month high for the month, and then we go down for the rest of the month. So if we do get up to that level, now that range here that I've drawn in for last month's range, if we do get up to that level, 62 level, so it's approximately the 136 level, and starts to stall, then, if we get up to that level that I'm just putting in, this approximate area here, if we got up to that level and started to stall, potentially then if we're negative for the rest of the month, we could be getting in at the top of the month and trading all the way down to the bottom of the month. So I'm doing this all the time. I'm assessing where prices move back into the candles. And so I'm showing you I've actually showed you 3 examples tonight: the Aussie dollar, the euro dollar, and the pound dollar. How I'm assessing what happened last month to where price action is right now and where the market might top out intra-month. All right, so at the moment, a lot of these pairs are just moving up on the 4-hour charts. They're having 3 days up. So I'm just monitoring to see where they could stop and turn around and start to move back down with the high time frame trend. Because on the Aussie dollar that I showed you on, the day chart's still down, the weekly trend's down, the monthly trend's down. Yes, we're having 3 days up, but it doesn't change the trend. I'd need to see the day chart trend to change at least before I'm going to think about buying. And that's the same exact thing on the pound dollar and the euro dollar. All right, we've got 4 minutes left, so I haven't really got time to go through any more pairs, but hopefully you found that very helpful in terms of analysis. Just be very aware that I just want to go back to the news items for the week. Lots of very critical news items coming out for the week. Like the pound dollar, we got the interest rate decision tomorrow. That'll be at 10 p.m. Queensland time, my time. We're expecting an interest rate hike. If that doesn't happen, I'm sure the pound dollar will go down, because I think at the moment people are buying it for the interest rate change. There's an expectation, so they're buying the possible positive news. And then if that doesn't come in, that will be very negative for the pair. The same evening at 10:45 p.m., we've got the euro interest rate decision coming out. So watch those levels that I gave you post that, 10:45 p.m. Queensland time. And on Friday at 11:30 p.m., we've got the US job figures. So there's a number of bombs that are going to come out and explode the market. And then what is price action going to do? All right, so be aware of what could affect positions. Badge Joe, thanks very much. Thanks for your comments there, and thanks for your questions. All right, everybody. Now, before I go, if you're on the live stream YouTube, thanks for attending. I couldn't see the chat that you're chatting in, so I couldn't answer your questions. But if you want to attend the webinar so you can ask questions, just head over to our webinar page. It is a acy.com, education webinars. You'll see the list of webinars coming up. And I'm just going to refresh this from yesterday. So that's the one we're in right now. But tomorrow we've got the Fibonacci webinar, 8 p.m. Sydney time. Next week, we're going to go through MACD, Tuesday, 8 p.m. Wednesday, again, live market analysis. Thursday, going to be going through the average true range and session opening times. All right, and all these webinars in terms of education, they're all built around my chart setup. So if you don't have my chart setup, just download it. And you'll see, I haven't been down to the 15-minute chart too much this evening, but on my 15-minute charts, I have the figure indicator, pivot points, MACD, today's projected high and low, which I'm going through next week, going through MACD next week, session opening times, going through that next week. So if you want to get access to all that, you can just use the link in the chat and you can get access to that. And as well, if you want to get access to the Telegram service, which I was showing, I'll just bring that up, where we're posting analysis in there. Predominantly, I'm posting analysis in there based around the webinar series. I'm showing you the key levels that I'm highlighting for the day. So, Badge Joe, you asking me, what do I do at the start of my day? Part of my day, I'm posting in some analysis of how I'm looking at the charts for the day, for my trading day. And I'm coming up with key trading levels that I'm watching. One of the levels I discussed earlier in the day was, or earlier in the webinar tonight, was this Aussie dollar one, which I posted. So I was talking in the webinar tonight about the 71.52 level, where price dropped down on the 4-hour chart. Often we come back to the point of the drop. We've got a 79% level here. That's the 79% level of the weekly range, which we're fighting at intraday at the moment. Whether or not that's going to actually hold for the whole week, who knows? But it is actually holding at that level at the moment. So if you want to get access to that, just contact Nathan and you can get yourself into that. And then you'll be getting my thoughts of how I'm thinking at the start of the day. All right, everybody. Thanks for all the questions coming in tonight. Just checking my chat. Mustafa, you said if ECB's dovish stance sustains tomorrow, yeah, if the ECB remains very dovish, I'm sure the euro dollar will probably just continue with its overall trend. Obviously, if they come out with a more hawkish stance, probably the euro dollar is going to move up then, because it will be a different stance to what the market's expecting. Yeah, so it'll be interesting to see what happens tomorrow night. It's going to be fireworks. It's got the pound interest rate, the euro interest rate. So, you know, be aware of those pairs. I'm not taking positions on those pairs until I know what the news has done, because I don't want to be on the wrong side of the wrong news. But other than that, yeah. Okay, everybody, thanks very much for your questions this evening. Hopefully you got value from that analysis. If you go to our YouTube channel tomorrow, if you want to review, if you head over to, let me just bring it up. Head over to our YouTube channel tomorrow. So it is in my URL up here. It's ACY Securities Australia. I'm on the video tab here. The webinar is actually on the live stream here, but tomorrow morning, you'll see that the webinar replay will be there. So you can go ahead and review the levels that I was discussing tonight if you want to go back and research that. All right, everybody, that's enough from me tonight. Thanks very much for attending. I look forward to seeing you next time.